Hey everyone, it's Online Goldmine here. Let's talk about something that's been absolutely exploding in popularity: cryptocurrency. We're going to break down everything you need to know, from what makes it go up and down to how you can potentially make money. And yes, the risks you absolutely need to know about. Crypto can be confusing, but stick with me. Once you understand it, it's actually pretty fascinating. Think about it. What if you'd bought Bitcoin back when it was just a few cents? Or invested in Ethereum before it hit thousands of dollars? Those are the kinds of life-changing gains people are talking about in the crypto world. Now, I'm not saying it's a guaranteed path to riches, because it's definitely not. But by the end of this video, you'll have a solid understanding of how cryptocurrency works, the different ways people are making money from it, and most importantly, how to protect yourself from the risks. Let's get started. Alright, before you even think about putting your hard-earned money into crypto, you need to understand what makes the market move. Because trust me, it can be a wild ride. So, what are the big factors at play? First off, we've got supply and demand. This is Econ 101, people. Just like with anything else, if there's a limited supply of a cryptocurrency and everyone wants a piece of it, the price is gonna skyrocket. Bitcoin is the perfect example. There will only ever be 21 million Bitcoins. That scarcity is a big part of why it's so valuable. Next up, government regulations. When governments make positive moves, like adopting crypto-friendly policies or big institutions getting involved, it gives investors confidence, and prices tend to go up. But on the flip side, negative news like bans or crackdowns can send the market into a tailspin. Then we've got technological advancements. Crypto is all about innovation, right? So when a cryptocurrency implements a major upgrade, it can significantly increase its value. Take Ethereum, for example. They made the switch to a more energy-efficient system called proof of stake, and that really boosted investor confidence. The point is, understanding these factors is crucial if you want to have any chance of success in the crypto market. Don't just jump in blindly. Do your research and stay informed. Okay, so you understand the factors that move the crypto market. But how do you actually turn that knowledge into profit? Now let's talk about how people actually make money in this space. There are several strategies, each with its own level of risk and reward. Because let's be real, that's what everyone wants to know, right? How can you turn your investment into a substantial return? First up, we've got trading. This is the most well-known strategy, but it's also the riskiest. Trading can be broken down into several types, with day trading being one of the most popular. Day trading involves buying and selling crypto within a single day, trying to capitalize on those minute-by-minute price fluctuations. It requires a lot of attention and quick decision-making. It's fast-paced, stressful, and definitely not for beginners. The volatility can be both a friend and a foe. Then there's swing trading, which is a bit more long-term. This strategy involves holding on to your positions for a longer period, ranging from days to months. Swing traders hold their positions for days, weeks, or even months, riding out those price swings to hopefully make a profit. This approach requires patience and a good understanding of market trends. Next, we've got long-term investing, also known as the HODL strategy. This is all about buying a cryptocurrency you believe in for the long haul, like Bitcoin or Ethereum, and holding on to it for years, regardless of the short-term ups and downs. The key here is to choose projects with strong fundamentals and a real-world use case. This strategy is less stressful, but requires a lot of research and conviction. The key here is to choose projects with strong fundamentals and a real-world use case. Look for cryptocurrencies that solve real problems and have a solid development team behind them. Now, if you're looking for a more passive way to earn, there's staking and yield farming. These methods allow you to earn rewards without actively trading. Basically, you lock up your crypto to help support the operation of a blockchain network or provide liquidity on decentralized finance platforms. In return, you earn rewards in the form of more cryptocurrency. This can be a great way to grow your holdings over time. The bottom line is, there are tons of different ways to potentially make money in the crypto world. Each method has its own set of advantages and challenges. But remember, every strategy comes with its own set of risks. Always do your research, and never invest more than you can afford to lose. Alright, it's time for a reality check. We've talked about the potential profits, but now let's talk about the risks involved in cryptocurrency because, believe me, there are plenty. First and foremost, volatility. The crypto market is like a roller coaster on steroids. Prices can swing wildly in a matter of hours, which can be exciting if you're on the winning side, but absolutely devastating if you're not. This extreme volatility can lead to significant gains, but it can also result in substantial losses. Imagine waking up to find your investment has halved overnight. It's a reality many crypto traders face. This is especially true for short-term traders who are constantly buying and selling. They need to be on their toes, ready to react to market changes at a moment's notice. Next, we've got regulatory uncertainty. The laws surrounding cryptocurrency are still evolving, and governments around the world are trying to figure out how to regulate this new asset class. This lack of clear regulation can create a lot of uncertainty for investors. One day, a country might be crypto-friendly, and the next, it could impose strict regulations or even bans. That means a sudden change in regulations could have a major impact on your investments. It's a risk that's always looming in the background. Security is another huge concern. Cryptocurrency exchanges and wallets are prime targets for hackers, and there's always the risk of phishing scams and other malicious actors trying to steal your funds. The decentralized nature of cryptocurrencies means that once your funds are gone, they're gone for good. There's no central authority to turn to for help. And here's the thing. If you lose your private keys or your funds get stolen, there's no way to recover them. They're gone forever. This makes securing your digital assets absolutely crucial. Then there's the emotional factor. Cryptocurrency is a highly speculative market, and it's easy to get caught up in the hype. The thrill of seeing prices skyrocket can be intoxicating, but it can also cloud your judgment. FOMO, or the fear of missing out, can lead to impulsive decisions and bad investments. It's a powerful emotion that can drive people to make rash choices. On the flip side, panic selling during a market crash can lock in losses and make it difficult to recover. The emotional roller coaster of crypto trading is not for the faint of heart. So, we've covered a lot of ground. You now know what moves the market, how people are making money, and the risks involved. But understanding the theory is just the beginning. But, how do you actually get started in the crypto world? The first step is to educate yourself thoroughly. Here are a few tips to help you navigate this exciting, but often confusing landscape. These tips will serve as your compass in the volatile world of cryptocurrencies. First and foremost, start small. Begin with a modest investment to get a feel for the market. Seriously, don't go all in with your life savings when you're just starting out. The crypto market is highly unpredictable. Only invest what you can afford to lose, and be prepared for the possibility that you could lose it all. This mindset will help you manage your expectations and stress levels. Think of it like dipping your toes in the water before jumping headfirst into the deep end. Next, diversify your investments. This is a key strategy for risk management. Don't put all your eggs in one basket, especially in a volatile market like crypto. Diversification can help you mitigate risks. Spread your investments across multiple cryptocurrencies to reduce your overall risk. This way, you can balance potential losses with potential gains. That way, if one investment goes south, you won't lose everything. Security is paramount. Always prioritize the safety of your assets. Use a reputable cryptocurrency exchange and store your crypto in a secure wallet. This will protect you from potential hacks and fraud. Consider using a hardware wallet for maximum security, especially if you're holding a significant amount of crypto. Hardware wallets are less vulnerable to online threats. Remember, if you lose your private keys, you lose your crypto. Keep them safe and secure. Stay informed. The crypto world moves at lightning speed, so it's crucial to stay up to date on the latest news, trends, and developments. Knowledge is power in this fast-paced environment. Follow trusted sources of information, do your own research, and don't believe everything you read on social media. Always verify the information before making any decisions. So there you have it. A crash course in all things cryptocurrency. We've talked about the factors that influence the market, the different ways you can potentially make money, the very real risks involved, and some tips to help you navigate this exciting new world. Now, I want to hear from you. Are you ready to dive into the world of crypto, or are you still feeling a bit cautious? Let me know in the comments below. And if you found this video helpful, be sure to give it a thumbs up, subscribe to Online Goldmine for more insights into the digital economy, and hit that notification bell so you don't miss out on any future videos. Thanks for watching, and I'll see you in the next one.